talking about just the self-storage market landscape overall. And I actually I enjoy reading about this, and it's a lot of learning opportunity for me to coming up with these slides. So this is me again. And we always like to start with this slide because most people don't know enough about self-storage. And especially when I first came to Canada, all I know is it was about the self-storage war and all these auction hunters. And it's fun because you always imagine you're going to find something exciting that is being auctioned off during these TV shows. Today, we're going to just explore self-storage in general. We're going to talk about the market growth, the outlook, what are the demand drivers, who are the key players, how do you get involved in investing in self-storage. So the number one reason why I think most of the operators that do self-storage do it, and also reason why the bank loves self-storage so much, is that throughout for the past decade, or even longer than that, since 2008. So self-storage was literally the number one. Now, some has been also stable, but self-storage has the lowest default rate with bankers because the margin was so high. When for multifamily, you're trying to get 30% sometimes, but with self-storage, oftentimes you're getting 60 cents on a dollar. They love self-storages. And there's other few things which we're going to talk about it as we go. Also, low overhead cost. So that one comes, we know that especially when we actually when we acquire any self-storage, our first thing is to eliminate on-site manager and just automate everything. Basically, everything can start touchless from beginning till the end without talking to anybody. It's also inexpensive value add. So when you want to do, let's say you have another acre, you want to add another self-storage, you can actually buy already pre-made pre-made fabricated ones, where as long as you have a slab, and they can just call your friends and they can just put it together. It's not that difficult. And also the automation, no tenants, because everything is month to month, so it's much easier. Also, no rent control, right? We were just talking about articles about how I think it was Biden trying to do some rent control and try to decrease your tax if you raise the rent for too much. So those kind of things that's going to happen in self-storage. It doesn't mean they won't do it in the future, but it's not been a focus for the lawmakers. And there's still a lot of mom and pop operators. So for self-storage, if you look at your area, it's only now we're starting to see bigger self-storage and private equity. It used to be that most of the self-storage is always owned by some guy who's 80 years old in your community and it's had that self-storage for like in their family for generations. And it does provide stable cash flow and of course, low utility bills. You pay for lights. And if you do climate control, yes, your utility can go up, but then you charge a lot more for those. So these are just the same thing, just to put it together in one slide. So we're going to talk a little bit about the history and evolution of self-storage market, which I actually was surprised that the first self-storage facility was built in 1960, at least in the United States. Yes, before Christ and in the olden Neanderthal era, I'm sure that people store things, okay? But the fact that you built a facility where people pay you money just to store it, and then they pay you monthly. So it was done in 1960. And this is another good thing for Texas. So Texas, another good reason to be there. So and now it has become a major real estate asset class now. So now the storage market in 2023 is valued at 40 billion, and the annual growth rate, I tried to read multiple articles. Most of them go between 5 and 12, but it's very consistent and, of 7%. And then it's not just in the US, the global market is expanding a lot more because of the urbanization, and then also a lot of small businesses, especially our generation. We're the entrepreneurial kind of generation. So there's always some reason to need the self-storage. So we're going to go over some statistics and some numbers that kind of help you put it together. So what has happened in the past few years on self-storage? So we see a big decline, just like the other real estate. So just like multifamily, we saw a big rise and then a big decline in 2023, late 2022. But despite that, the transaction volume is never really stopped in self-storage like multifamily. In multifamily, it almost went to a halt, but self-storage continued to transact, which is quite impressive. And even with this decline, the 12 months volume is still higher if you go backwards. So basically, self-storage continued to sell. Then the valuation trend, which is also surprising to me, and we're going to talk about that later, of the implication of this. So the valuation continued to go up. It doesn't really go down much. And I remember buying self-storage for cap rate of 12. And now you'll be lucky if you get it for cap of 7, 6. So it's almost all the valuation continue to go up. And I think it might be because more sophisticated operators coming into the market now. So we're just watching it at this point because of that. Because before it was just a mom and pop, you can easily negotiate the value of the self-storage with grandpa that just want to retire, have a little bit of money. But now you have private equity and syndication costs that want to sell, and it's all about the number, cash on cash return, NOI. So it's tough to get a good deal like it used to be. Still, the numbers of people that rent, I hear this a lot. Whenever I talk about self-storage, many people cannot wrap their head around it. And this includes our business analyst. He still does not understand self-storage because he would tell me, I still don't understand why people are putting things in the self-storage. But the numbers continue to go up. It's just Americans are consumers. So they will always want to buy more things, and they will always want to store it somewhere. Quick other things, just to say, so 10% of households basically rent self-storage. So usually we use that for analysis. So if you look at the population, and then you estimate how many people in each household, maybe 4 people in each household, and then you could estimate that 10% of those are going to rent. And then if you look at how many self-storage are in that area, and if it's too many, more than that 10%, then maybe it's not a good idea for you to buy or build a new one in that space. So there's lots of self-storage. You can't drive like a mile without seeing like multiple self-storages, especially in the big cities. Okay. Do you guys have any questions before I move to the next topic, which is what is driving that demand, which we talk about it a little bit. Is George back? Okay, he's back. So, so the 4 main things, and then that are driving the demand is mainly urbanization, right? People are moving to the city. And if there's one thing about the city that many people hate is the fact that there's no parking and no storage space. So, so that's what's happening. And then the consumerism. I do not think that's going to stop anytime soon. And life transitions, that's always going to, be a constant. Things are going to happen. People, and then business need, like I talk about, small businesses and e-commerce. You need some place to temporarily put your products before you ship it. So we usually like to use this like a 4Ds, 5Ds, of divorce, death, downsizing, and dislocation. So these are the sad reality of life, and that your stuff needs to go somewhere. So I think there's always going to be a reason to have self-storages. Who are the key players in the market? So these are publicly traded companies. So we have the public Extra Space Storage, CubeSmart, and Live Storage. So when I'm doing my marketing and I see them as ranking number one, it's almost futile for you to try to beat them in the SEO, because these are professionals. So just accept that they're going to be full, and then you then get the next set of customers. So that's usually how it works. So we like to study why are they successful. Public storage, they're one of the first few movers, like first that started first, right? So they have that, and they'll have such a big location, like high volume. And then the economy of scale helped them a lot, because when I see public storage here, I will see maybe 3 of them, and then they market them together. They would run the ads that says, pick your location. So think about it. You have a self-storage and you have to run the same ads for just one location with like maybe 100 units, but the same ads will run for 1,000 units for them. So they are getting more bang for their bucks for that. Extra space storage, mostly technology. So they want everything to be by your phone. It's very touchless, and people love that. And then CubeSmart, it caters to the urban market. So basically, you have to niche yourself and try to find something that give you the advantage. And Live Storage, they are known to have very wide range of units, because I tend to like multiple units when I buy self-storages. For example, I had a self-storage. It was nice. It was awesome, but it was only 10 by 20. So I'm like, I don't even understand how someone would just build a self-storage with one size and build like 200 of them. It's the same thing like multifamily. You want like diversity, but not too much either, because we are fine like 10 by 10, for example, does not really, people don't like it. Every time we have 10 by 10, we either have to convert it into 10 by 20, because 2 of them together, because people just don't want 10 by 10. They like 5 by 10 and 10 by 20s. So also they partner a lot, partner with another services, partner with Uber or something like that, or something to make your life a little bit easier. So this is the same, just about how many facilities each one of them has. Like I said, it's still a fragmented market, which means there's still opportunity for you to go out there and purchase many of these mom and pop owners, right? When you drive for dollar, like when you're driving around and looking for multifamily self-storage, look for self-storages with bad maintenance. The grass is overgrown, and it just wonders, like, who's managing this? Oftentimes, usually like one mom and pop, and that month is sick or something, it's not able to manage it because it's not professionally managed. And those are the ones you keep eye on it, and then you find who owns it, and then you make an offer. So a few things. I'm going to mention the flexible leasing, which is the main advantage of self-storage, because it's month to month. You can change your rent anytime you like. And so it allows you to maneuver much, much easier than multifamily. So that's one thing I'll say. Some are starting to try to use the trend. The trend is your friend in terms of global warming. So you could, if you know that you're in an urban area and you're in California, or you're in a location where you know that the younger generations want to get that green building practices, solar. So you can advertise that and say, oh, we use solar, we use all that. And then, they're more likely to rent your facility. Climate control unit is one thing that I never thought is going to take off, but somehow it's increasing demand. It's unbelievable, because in the past, what people put in storage, it used to just be like junk or TV, couches. Like one of our self-storages, for example, someone stored their wedding dress, and she told us, oh, I want the climate controlled unit. And what temperature do you have it at? And so for her, it was sentimental. And she paid $100 a month. I'm, I can't believe it, but people do it. And it's just the way we have evolved nowadays to basically want to put more things in the self-storage than we used to. And then people keep pushing the limit of what you can put there. I personally will not put what is valuable in the self-storage. And then also a lot of technology integration, mobile apps, booking, everything is basically touchless. So after you acquire, so what do we do? The first thing we do is usually we put a logo, right? You make a sign. We almost always change the sign for some reason. People always have a sign that has been not bright, it's not trendy. So you change that. And then, of course, you put your contact information every single place you can find it, right? Online, and change it to the right one, because people are still going to be calling the old owners. One thing that, is a little bit different is this competitor and referral program. So you can go to your competitor and just talk to them and say, look, whenever you're full, do you mind just referring people to us? And then you work out something for them. Or you have a reciprocity. Okay, if we're full with 10 by 20, we'll send them to you. And then that works. And then you run Facebook ads. We do Facebook ads for most part. Google ads once in a while. But most of the self-storage market is very local. So it's a very local market. So most of your things, you probably do better with local papers. Colleges, there's college here. We always, whenever it's time for them to start school, we always have that 1 month, 50% off first month or something like that. We also do military discount, do things like that. You look like a nice person in the community, at the same time you're making business for yourself. So these are some of the technology. We always increase the technology. We find a way to improve it, because so if I find a self-storage that already has everything, it's probably not a good buy, because there's not a lot of value add. But the one we buy is usually ones that is maybe doesn't have a gate, or it has a fence, but it doesn't have a access control like touch pad. And you have to call somebody have to come there, they're going to open it for you. So it's not efficient. Some of them don't have camera. And if they have camera, they almost never work. Although I do know that just having the camera there can be enough as a deterrent, but I would rather just at least want to be able to see it so I can go back. So you want to change that, online moving, automatic payments. And we have some case study. We're going to show you some of our self-storages. There are 3 ways you can own, right? You can either have direct ownership, which for smaller property is not a bad idea. But one thing I need to say about self-storage is you don't want small self-storage. So let's say you have 20 units of self-storage. You're going to have trouble with that self-storage, because first, if you use a software, you're going to have to pay for that software, and it's too small to support marketing. So I've done that before, where I bought a smaller unit, and then, even to maintain the website, it's for the 20 units, it's not worth it. So you end up stuck with just a sign, and that's, and there's not a lot of automation. You're not going to fence a 20 unit, right? You're not going to put a gate. So you want more volume. For me, I won't look at it if it's less than 100 units, so that at least I can market it and I can use the software. We use what is called an easy storage solution. It's one of the best software. So you can do almost everything there. And you can do REIT. You can invest in those publicly traded companies. If you still really want to get something that is close as possible to stocks, then you can just invest in a company that is traded that does self-storage. So that's a way to do it. Or you can do partnership, with operators like us. You collaborate, you do joint venture, which we did that too. If somebody, you need 500K to buy it, you have 250, somebody else have 250. You can work something out and be like, okay, fine, we'll do a joint venture together. And then, we'll split the profits this way. So those are the three ways. We prefer either direct ownership or partnership. Only because with REIT, I just feel like it's just like stocks. I just don't have the control at all. Of course, each one has its own pros and cons, right? Direct ownership, you need to have money, a lot of money. With REITs, you could buy a stock if you want to. The stock might be $20. You can buy one. So it's low barrier, low cost to entry. And for partnerships, it's in between. So you don't need 500K, but maybe 50K to invest in some of the deals. So many of them, still performing. I'm actually going to say our self-storages are one of the ones that are performing the best currently in terms of ability to distribute, to investors. Multifamily, here and there, you see a quarter hold in distribution. It does happen in self-storages too, but self-storage tend to cash flow a lot more than multifamily. We have talked about this already. Of course, there's some risks and challenges to self-storages too, right? So what we're seeing now is a lot of market saturation. So over here in the market, I think it was 2021, 2022, it's like self-storage everywhere. Everybody just erecting them. And they're converting offices to self-storages, especially climate controlled. So people are getting more creative in building these self-storages now. I think it's like chicken coop in our area, because they already have a slab. So if you already have a slab, all that is left is for you to just build the self-storage on top of it. So people bought all that and started building more self-storages. They're still doing well, but I'm going to show you, we started to see a little bit dip in occupancy. Economy downturn still, you're still going to fluctuate, just like any other asset class. And also, there's operational challenges, right? Like one of our self-storages is in Pearland, Pearland, Texas. So if something happens there, we have a boot on the ground, but there's still some inefficiency of managing from afar, right? Making sure somebody go check on it apart from that guy. I'm like, George, live close by there. I need to go take a look. So you need to have resources on the ground. And so this is our case study. So we do have the three we have in Northwest Arkansas. This is just the last email we send out. So with high interest rates, buying of homes has slowed down, and that has put a big dent in the self-storage market. So before, occupancy used to be, even though we underwrite for 85% occupancy, we have a waiting list. During COVID and after COVID, it was like waiting list on every single self-storage. But now we see a little bit of a dip, so you have to change your strategy a little bit. What is more important is this recurrent billing. So you want to make sure that you do whatever it takes to get them to do recurrent billing. So when they rent the self-storage, you email them or call them and make an offer. Be like, we're gonna give you 1 month free if you join the recurrent billing. They didn't do it automatically, because they're very sticky. Once they join recurrent billing, they might not be at that storage for 1 year, and then you continue to just get the money. And so you want it to be in the 80s if possible. So that's the main part. So if you have occupancy of 87%, I don't even know how the recoverability is higher. I guess some people moved out. But you get the point in that the recoverability is basically close to the occupancy. So that's what you want. And quarterly distribution is being sent. So this is one of the dashboard, what it looks like in general. Some of this waiting list, you will have 10 by 10 empty. Like it will be like there's 10 of them or 5 of them vacant. But then you have 10 by 20 is 100% occupied. So what you do is talk to these people on the waiting list to see, if they want to take that one for a much discount. Or you raise the rent. That's why you really don't want, if your occupancy is 95 and above in self-storage, you're underperforming. So I have set mine automatically that every time the occupancy gets to 90%, it automatically increases the rent by 3%. So your goal is to get some people to get out, especially if you have a high demand in your area. So you could be having low occupancy, not too low, but in the high 80s, low 90s, and be making more than if you have 100% occupancy because you're constantly increasing the rent. And especially when you have almost everyone on recurrent billing, they didn't even notice it. You just go for 3%. And then 6 months later, you drop another 3%. So you can raise as much as you like. And if people are not leaving, especially the 10 by 20, you just continue to increase it. I have went from $90 to $120 before people started moving. So you can literally increase your NOI. Same thing here. Okay, we always do this on the first. Okay. So yeah, you just always want to do some of these best practices, for the facility management. You want to market, you want to continue your marketing, when you're full, you can change it to brand awareness. When you do Facebook ads, you can just do brand awareness where people just look at your brand, they see your name instead of actually clicking. But if you're low, then you run a different ads, which is pay per click. You want to maintain it because that's how I know facilities that I can buy. If I don't see a regular upkeep and they're slacking on their lawn, I know there's either issues or they're not experienced operators. Provide excellent customer service. There are some of them in my close by to me that sometimes you have to actually show up once in a while to help them resolve an issue. Of course, it's not, also on the phone. So try to be as nice as possible. And then security measures. So you want to make sure that they feel like their property is well protected, right? So that's why they're putting it in there. So you want the gate to open seamlessly, close seamlessly. Many people, for example, one of our self-storage, if you have like empty space, there's something like about empty space, and we started using it for parking. And that you can make another $500 by having 10 space, just random, or just like a lawn. And then you make 10 demarcations. But because of that, people now drive in and out because somebody watch over it. There's 3 commercial, there's 3 offices by it. So we are let it stay open from 9 o'clock to 5 o'clock. But then some customer will complain about that. They'll be like, oh, I just feel like people can just drive in and out. And then we have to stop that. So you just have to make them feel safe. And so these are the ones, for Smith, Arkansas, Pearland. I'm going to stop here just for discussions.
Nice, man.
Yeah.
Yeah, we're open for discussion and questions. If anyone has questions, please leave them in the chat. You can always come off mute, raise your hand as well. Thanks, Bio, for the complete presentation, man. That was nice and comprehensive. I was curious. I apologize. My connection messed up, so I didn't catch the entire beginning. But did you touch on, or can you touch on, like the differences in return profile compared to something like multifamily, where conservative cash on cash return is anywhere between 6 and 10%, depending on where you are in the economic cycle? So what does self-storage return, cash on cash returns look like in the upcycle? Like you explained, you described like a few years ago, and then now that it's cycling down and through.
If you're investing for cash flow, self-storage actually is better than multifamily in terms of course, we always can say deals differs, right? But yeah, at one point we're getting like 12%. The cash on cash is much higher. But the return at the end of 5 years tend to be the same. That's what I found out. I was so happy about that too. Okay, wow, look at this cash, it's nice. But by the time we sell it and we do the calculation, it will still be the same, only because there's only so much value add you can do to self-storage. You only have 4 walls. Maybe you can add a little bit of covered parking, uncovered parking, but it's not, you can't really move the needle like you do in multifamily for equity. You know, for multifamily, you could be like, okay, we're going to cut this expense here, you know, increase the rent this way, and then we're going to have Tesla chargers and charge people another $10. You know, you can, you know, the water, you can do ratio utility billing. There's so many things you can do with multifamily that you can use it to raise your NOI. But with self-storage, you're stuck with basically trying to raise the rent as much as possible. And then when you hit a competition, you hit a wall, then you have to drop it also. So you just get really dynamic pricing, essentially. So yeah, to answer your question, higher cash flow for sure, but in terms of overall return, it's very similar.
Just to give people an idea, for multifamily, overall return, like an average annual return, typically is around 20%. If we say 6 to 10% is cash on cash, that means the other 10 to 14% is coming from your equity, like he's saying. And that makes a lot of sense to me. I didn't think about it. You explained it, but now it makes a lot more sense. I think the expenses are lower compared to multifamily, right? So that's one way you can lower expenses in multifamily, is by somehow getting creative with expenses. But you can do that in self-storage too, but maybe not to a same degree. Is that where the difference is?
Yes. You know how we do 50% rule with multifamily? So when you want to analyze multifamily, we automatically say, okay, it's $1 million. We're making 1 million per month. 500K is going to go for the two expenses when you do a quick analysis, right? But for self-storage, with how efficient we are, it's about 25%, the expenses. How much can you cut 25%? It's already just lean. We don't have anyone on site. It's just, you go online, you click easy storage solution, and then you book it. You go, your key is waiting for you, and then you actually don't need that. You need the key code. You can buy your own lock, and then you go in there. So there's literally nothing much. You can,
Right.
There's not a lot of ways to decrease the expenses once you get to our level. But multifamily, though, when you buy it, oftentimes you always find some inefficiency. They always have this payroll. They were like, why are they paying $150,000 for payroll for a 50 units? You're like, so you can cut expenses. My Tulsa deal, the owner was paying the water. And just by that, I believe that if I'm able to be successful in converting all of that $70-something thousand a month into the tenants with the ratio utility billing, then that itself will give over about $1 million of more additional revenue. Sorry, additional buy price, right? Because buy, then, it's going to add about $1 million to it. But it's just two different things. However, most people that talk about self-storage, even the older generations, always talk about it almost like car wash. They always talk about the cash. It's about the cash flow.
Cash.
Oh, my cash cow. It's my cash. So they're not even thinking of selling. They own it for 50 years, but they enjoy that 50
Yeah,
years. Cash on
that was
cash.
going to be my other question. What are you typically seeing as far as the overall business plan? You have some multifamily investors who will plan for 3 to 5 year exit, and then you have other ones who will want to hold it 10, 15 years. What's like typically the industry standard for self-storage? A lot of people holding, or a lot of people cash out refi. What do you see?
Most people never sell their self-storage in terms of they'd like to just keep it. It's almost, I mean, there are a few self-storages I've been trying to buy in my town with, they're like 80 years old. Like the guy is 80 years old. And I'm like, you gotta sell it at some point. Just hold on to it. It's like, oh, I've had it for 60 years. It's low maintenance, it's cash flowing. However, though, for us though, because we're like a private equity, small private equity, so we always try to transact. So we're probably gonna sell it, you know, if we see a buyer in 5 years. Same thing like multifamily. However, most mom and pop though, once you have a self-storage, you just, that self-storage become synonymous with that area. It's almost like it's stuck there. Especially in my community in Fort Smith, Arkansas, by name.
So I think that's important. Before I go to Deshaun's question, I think that's important to note. This solves different asset classes solve different problems. And we constantly talk about that. Like not every asset class is the same, and that's a good thing. You want a certain asset class to check the box of conservative cash flow. Maybe you want another asset class to check the box of more aggressive double-digit cash flow. Another one can answer the problem of taxes, and you can mix and match, or you can lean into one if you want to over concentrate, right? Over allocate into one area. It's all dependent on what your goal is, right? Someone looking for like the actual quote unquote financial freedom, that's based on passive income. So higher cash flow, right, might be your target. And so self-storage could fit into your portfolio very nicely if you want to really get to a certain number of passive income. Yeah, it's pretty cool.
Actually, I would say that's what many of them use it for. Is for the older mom and pop. Often something is generating 15. The longer you own it, the better the cash on cash return too, right? If you're raising the rent. So it's probably like 25% for them now. Or some of them even own it outright, by that time. So they paid all the mortgages and now they just own it. It's not uncommon for you to do seller financing because they always eventually pay it off. So imagine you paid it off and then you're making, I don't know, 25, 30%, or even 50%.
That's a great exit for them because they essentially sell it, but they're still getting some kind of monthly cash flow because they did a carryback.
Yes.
Now it's an interest note. All right. Deshaun asks, I wanted to ask about rental rates. Since COVID, I've seen a lot of data showing rental rates have dropped due to market saturation, lower rates of home purchases, and therefore moving related storage and less consumer price sensitivity. People less likely to move out of current units for one that is a few bucks cheaper. I think you mentioned that, right? Transaction volume has gone down with people trading homes.
Yes.
So that means less dislocation.
Yes.
All right.
Less dislocation. But funny thing, we were just looking at the data and just arguing it out, me and George, about divorce. So right after COVID, divorce rate went up significantly. And also there's something happened to people after COVID. They just want that, what if I die tomorrow mentality, YOLO. And funniest thing is that they end up being good for self-storage. People they buy more things. They're like, oh, I just need this. And they move. And then the divorce, you have to put your stuff somewhere. And now I think it's kind of, divorce now is lower now because economy is not that great. Just depend if you're middle class or upper class. But the economy is tight, especially for lower middle class and lower class. And as a result, they won't divorce more because they just want for that economic stability. So there's things, and yes, there is. And I'm going to be honest that not so much for the self-storage, but for multifamily, we had to give some incentive sometimes in the past 6 months to someone. We have to do 1 month free for 13 months if you sign for a 13-month lease. We got creative. So technically, that's a drop in rent, in the rent, but it doesn't look like that because you still get the same, but then you end up giving that 1 month for free. But then in my mind, that would have been an empty apartment anyways. So 1 month for free didn't really hurt you as much. But anyway, so yes, there's less and there's market saturation and lower ability for you to raise the rent. Also, it's seasonal. Self-storage is seasonal, so you have to make your move in the season. So in the winter, people are not moving a lot. It might be good for you, so people are not moving out of your unit, but people are not moving in either. Like literally our occupancy from September, October, November, December, January, we just stay the same. And then we put our marketing when it's like February all the way to around August. And then it slows down again. So when you want to raise the rate is when during the peak season. So I'm usually confident raising it around March, April, because usually I have people calling everywhere. But if you raise your rates in October, November, if they move, you'll be empty for 4 months. So
I think this is a curious question from the shop because it's one factor, right, that can impact the demand for self-storage. But I think as you pointed out, there's multiple factors, multiple data points that could also impact demand. So I always think of it as you have like pulling one way or the other, and then it somehow balances. I don't know which factor is the most impactful because I don't yet own self-storage. I hope to one day. I think Bio can speak to it. But I know, Bio, you talked about immigration, increasing population will put some pressure on rental rates, right?
yeah.
You've talked about divorce as well. Definitely dislocation. I can understand that, but what do you think is the most impactful? Which factor, which lever, when pulled, has the biggest impact on social or self-storage?
I think migration and population growth. There's actually this article I was reading, I have it here, that talks about all of those things. So yeah, I think movement, you need people to move. Because when we start seeing the drop in the occupancy, it's mostly when no transaction is taking place. People are not moving from homes to homes as much as they should. So I say that, and population growth. Like in my area, for example, there's the increase, like for example, Northwest Arkansas, right? If you know that this place is growing like exponentially, they can't keep building it fast enough. You feel like, okay, this population growth can sustain. So I'll probably say population growth and like transactions in terms of house, people moving in and out of homes. So let's see, this article, if you want to read it, this one, let me see the name. It's called Market Trends and Sector Outlook, US Self-Storage. And this is by, so what's the name now? Cushman and Wakefield. So they release it I follow it every single quarter. They release what they think, and I find them to be spot on most of the time.
Were you sharing the screen or the link?
Yeah, let's see. Let me see if the link can be shared. It says Chrome extension, Ctrl V. Oh, I don't know. I say Chrome extension, so I don't know. It looks like, almost like click. You want to try it, George, to see if it works?
Yeah, sure. Yeah, it takes you to yeah, no, it works. It looks like a whole PDF.
Yeah, okay.
Yep.
So that's where, so I gathered most of many of the data from there. But they remain optimistic actually about the self-storage market. Although for me, I remain cautious right now because unless I can get it for a cap of 9, I'm not buying. I want the cap rate to be much higher because in the olden days, we used to buy self-storage with cap of 12. But now you're getting into 6 and 7. It's ridiculous. Maybe I just can't, maybe I can't wrap my mind around it or something. But that's why I haven't. I see many of them out there and I'm like, what happened to mom and pop? You just negotiate with grandpa and get a good deal. Grandpa that haven't raised rent for 5 years. But it's becoming rare and rare to find those.
Can you quickly speak on your take on maybe the variations of self-storage? I think 10 by 20 and whatever. But what about like boat storage or RV storage, industrial storage, open air storage? I don't know if all of us are aware of those variations of storage.
So when they were talking about the market, they were specifically talking about just the self-storage, which is basically mini storages, basically for properties and things like that, not so much of both. However, boat storage is, as long as you're close to a dock, you'll be good. And boat storage, we have one, and it's actually pretty good because people store their boat, they only come and use it for like a few months, but then it stays there doing nothing for 10 months and you get paid. And also in terms of, for example, the contract for self-storage is such that you don't really, once you put your property in self-storage, you technically don't own it anymore, right? Because once you put it in self-storage, they can auction it if you don't pay. So for boat storage, I feel like we never got to that level where they won't pay because it's a boat. So they tend to be more responsible, I would say. That's the only thing I can say. Because the versus once in a while you see someone with self-storage, they just walk away. You just can't find them. And then you have to auction their things. And many times it's junk, something that you can't really get much from it. Or you can just get someone, be like, my handyman, he loves it. And I just take whatever I can from it. I'll give you $100. I'm like, deal. You know, and if you can just get rid of it, I'm happy. Get rid of everything in it so that I can rent it out again. But yeah, but for boat storage, I feel like you get more. So warehouses are doing, we only have 6 individual ones and they're always full. And also in the area, someone just built another 50 and it's already pre-leased. So these are big, huge warehouses. And what do people store there? Some guy work on his car in one of them, and they store like heavy equipment. Over here, some military, large vehicles, or like tractors and stuff like that. Sometimes I wonder why they can't just store it on their farm, but hey, they store.
I'll throw in data centers as well. We were talking about that the other day. A lot of AI, 5G, crypto, a lot of that is where the puck is headed and where the trend is headed. And so these companies, these businesses that are in that sector need places to store their data centers. And that's also on the table as well.
It's any form of storage. Heck, I even I pay $50 a month to store my letters at UPS. I always wonder about that. So I open a virtual address and every time I want to change it, but I'm like, people already know me with the address. I'm like, so I just pay $50 every month.
You just reminded me, I know someone who's doing mini mailboxes. So they compete with UPS or not UPS, USPS. And they do like mini mailboxes. And they say the model is very similar to mini storage, self-storage.
It's easy, to be honest. It's a small box for $50 where they have my letters, and I go there, collect the letters, I have my key, and that's it. You don't even need a lot of space. You can use one
Yep.
small room and have
Yep.
1,000 of them. Anyways, I just thought that I kick myself once in a while. I'm like, man, why am I paying this? But I can't stop myself. So, anyways, do you have any more questions?
We're 10 after the hour, so we want to be respectful of everybody's time. Thank you, Bio. Thanks for the presentation. Hopefully we'll get to do some new self-storage soon. So
Okay. Well,
thank you
thanks everyone.
guys. You're
Take
welcome.
care.
Thanks, Billy.
Bye.
Thanks, Uche. Everyone have a great night, and we'll see you on the next one.